Fine, good. Uh, is it? Today is what? Today is 7th, is it right?
Yes, it's right.
It's 7, okay. Now, what? See, very simple, okay? What is the, how we are going to measure it, is it right? When you are talking about the measurement, financial accounting, is it right? When we say when we talk about a financial accounting, is it right? When you talk about the financial, yes, financial accounting as such, see, financial accounting is basically done what in terms of what? In terms of historical cost. Is it? If you take this into consideration, people will say that it is one of the limitations. Is it? It is one of the limitations of financial accounting. Apart from that, there are various things. There is something we call as current cost accounting also. Is it? Current cost accounting. It is there on paper, but nobody will use this. Okay? It is there on the paper, but nobody will. You have something called as current purchasing power accounting. Okay, so we have something called as CCA and one thing called as CPP. Okay, current purchasing power accounting. We are automatically we are talking about the historical cost. That's all, isn't it? Now, apart from that, this is only in terms of accounting. How we are measuring? One side we are talking in terms of the method of calculations of accounting. One side we are talking in terms of valuation. Isn't it? When we say valuation, again, valuation is what happened. We take the valuation on historical cost basis. Is it right? On historical cost basis. We take the calculations on net realizable value. Is it right? We are taking into net realizable value. We take into calculation with respect to what? Fair value. Isn't it? We take it to fair. This is basically the terminology we should know. Why we are doing this lecture? That's very important. What the purpose of doing lecture is, we should have the understanding about the terminology of the words which we are going to use in the subsequent lectures as such. Okay, that's the basic understanding. Fine. Now, when you're talking about the things, definitely see, is it right? When we are saying it is financial accounting, is it right? When we are talking in terms of financial accounting as such, is it right? Financial accounting is basically what? See, we are very clear in terms of what we are not concerned about equity, because equity is not market value. Okay, market value, equity, the moment you say equity, it is the market value. But the moment you say it is assets, definitely assets value, sometimes it will increase and sometimes it will decrease. And basically when you are talking about the assets, International Accounting Standard 16, property, plant and equipment, there is a component of depreciation. When there have the component of depreciation, definitely it makes sense for us to understand. Okay, is that it makes sense for us to understand as such. Is that now we will take that into consideration. Define historical cost and what is the asset value. Very simple. See, we have done in the impairment, is it right? In the tangible assets and impairment, what we have done? We have done something called as a carrying value. Is it right? We are talking in terms of carrying value. We are talking in terms of what? Realizable value. Is it right? We have discussed something called as fair value. Is it right? In the previous lectures we have done this. Is it right? They have done this. Based on that, the same thing will happen. Is it right? What is the value which we are going to show in the balance sheet? Historical cost. There is no other option as such. Is that we don't have any option as such. Always we have to say it is the assets minus depreciation, or we have to show it assets on the asset side, property, plant and equipment, and on the liability side what we will show, we are going to show it as a accumulated depreciation. We have both the methods as such, is it right? One side you show it on the asset, the total value, is it right? The total value we are going to show, is it right? And on the liability side, we will show what? We'll show the only the accumulated depreciation. Fine. Both the methods are acceptable. Next, we are talking what is the fair value. Most important, this is nowadays, if you take into consideration the, is it right? Nowadays, if you take into consideration, 1 minute, I'm admitting, is it? Yeah. Now, Salam Alaikum Rizwan. Is right? Nowadays, if we have started that historical lecture 7, okay? No problem. I will explain you. Continue. Okay? When we take it, there are two methods. One side, either we are going to show the assets minus depreciation, or another method is you show assets on the asset side and you have to show a liability side accumulated depreciation. Is that? It is only the understanding that makes. Nowadays, what is more important? People are talking in terms of what? Fair value. Is that what? Or we are talking in terms of what is the current value? That's what it says. See, you will estimate, you have a car, as simple as that. You will say that the car is going to be 10,000. Fine. You want to sell it, that car. But you will say it is 10,000. But the moment you enter the market and you practically exchange the car with money, the value will be more or value will be less. That is the current value. Got my point? I am just listen again. You have the value of the car is 10,000, but actually you enter the market and say that yes, I want to sell this car. Definitely you will get more or you will get less. That's very important, isn't it? What is the fair value, and what is the how we have to calculate the net realizable value. When you are going to say it is when you are going to sell, is it right? What will happen? In some times you have to deduct what you will have some selling cost. Is it? You have some selling cost. This selling cost has to be deducted from the sale value. Okay? This selling cost has to be deducted from the sale value. That's very important. You have again another one. What is there? You have not done financial management. Okay? We have done one similar question in the lecture 2. Again, what will happen over a period of time is that the rule says that there is a time value of money. Is it? There is a time value of money. When there is a time value of money, is it right? What will happen? The value of money always decreases. Don't expect that the value of money will increase. Whichever currency it is there. Last year you are paying for Pepsi, you have paid 100 paisa when you are in school. Is it right? Now you are paying the same Pepsi 200 or 250 paisa. Is it right? Means you are paying more. You will not pay less. Is it right? Anything. Only the value of the land will increase. Apart from that, any value, the value will decrease. We have to take into consideration the time value of money as such. Okay, because it is recording, I am not writing that much. Okay, now we will take that into consideration. We will do some small questions are there. Is it a calculations are there? We have the definitely there are some advantages and disadvantages of historical cost account. Is a historical cost, is a past cost. Okay. Next, apart from that, when you do the things I told you in the beginning, you have whether we have a use the current value of accounting. This is only there in the books. Keep it in mind. No standard has been exclusively stated for this. Is that no standard has been exclusively stated for this. This is there only in the books. Current purchasing power accounting, current cost accounting, current cost accounting. Is that current cost accounting? Is it right? Current cost accounting. Basically, we are talking in terms of cost accounting perspective, management and cost accounting. Is it right? You have current purchasing power accounting. Is it current purchasing power accounting? Current purchasing power accounting talks about what? Inflation. Maybe you have the concept, you have studied something on inflation. The prices will increase. Is it? When the prices will increasing, definitely you will purchase on the 1st of January, you will purchase, you are purchasing just on 1st of January 2022, you will pay how much? You will pay 1000 reals. the same product on 1st of July, is it right? 2022, you will pay how much? You will never pay less, never ever pay less, is it right? You are going to pay 1,175. The prices are increasing because of what? The prices are increasing because of inflation. Fine. This is the basic concept which you have to understand. Next, when we are doing the things measurement, what are the measurement basis? Is it? We are talking about when we say it's a measurement basis, there are 4 different measurement bases. We have done this, is it right? This is what we have done in the tangible assets and impairment. Okay, we have done. There is a historical cost, the actual cost, as per the, see, whatever happens, this is the cost which you are going to show in the financial statement. The financial statements is only and only based on historical cost. We agree, we don't agree, it doesn't make any difference as such. You have the current cost, is it? What is the cost if you want to replace it? Is that, that's the basic thing. Whenever you want to replace, is that you want to replace your smartphone, you want to replace your car, is it right? When you want to replace the car, definitely you want to exchange it, is it right? Assume you have a car, you want to exchange it. You go to the dealer and you say that, yes, what he will do, he will calculate the current cost, is it right? Reflecting what is the age, what is the conditions, is it right? If basically insurance, if you have the car, is it right? You are going to an insurance company annually and you will ask for a premium, is it right? You will got insurance, you will pay for insurance. What the insurance companies will do? Insurance companies will calculate what is the current cost. On the basis of current cost, they will calculate the insurance premium. Is it right? Based on what? They will take into consideration the age factor in number of life and as well as the conditions. Fine. That is the basic condition. Now, what is the fair value? That is the fair value is the normal value. Is that it is? We say it's a orderly arm's length transaction. Is that arm's length disposal means you should not have excess. Is it right? You should not have excess valuation or you should not have a deficit valuation. Is it deficit? You should not have that. Arm's length means manageable. Is that realistic? Is that realistic? Arm's length. It's like your arm. You are saying, see, you say you can reach that. Is it that? You cannot say that I am charging 25% profit. Is it that? You will say that, yes, what is the 100 reals? If it is, yes, 5% profit. It is arm's length. Is it right? If you say that 100% you will add 50%, nobody will buy. Is it right? The fair value is nothing but it depends on the arm's length transaction. The last one is what? Value in use. In the value in use, we will use what? We use discounted value. When we say it is a discounted value, we are talking in terms of what? We are talking in terms of present values. And when say it is a present value, it is nothing but time value of money. Fine. This is what we are concerned about the concepts as such. Most items are held at historical cost. This is the fact. You cannot ignore it. It is the only fact. Current cost is normally used an alternative to historical cost. Is that with respect to what we are talking about? I just told you. In terms of what? In terms of inflation. Prices are increasing. Is it right? In that case, we will think about the current cost. But see the thing, there is no replacement for that. There is no substitute for this. Is that some items are revalued, assets or investment. In some cases, the fair value. Is it right? It revalued to the fair value. Fair value means arm's length transaction. Listen carefully, remember this. Is it right? Remember this because they will ask you a twisted question. Is it right? Whenever you are talking about, the moment they will twist it, we will get confused. Is it right? By being what is the realizable value, what we are going to sell at that point of time. Present value is with respect to the use with respect to cash flows. Is that when we use the cash present value when we are talking about the future period. Financial management, inshallah, you will cover these concepts. Is it right? Financial management. What is we'll say that I will put it like you are talking about the cash flows. Year 1, Is it right? Year 1, year 2, year 3, year 4. Is it right? You will estimate this 10,000, 12,000, is it right? 14,000 and 15,000. Assume these are your cash flows. Is that see value of 10,000? This is what this is the year 2022. Is that this is 2023? Is that this is 2024? Is it right? This is 2025. Value of 10,000. Today you are investing 15,000. The value will be remain 15,000 after 3-4 years. No, the value of money will decrease. Got my point? That is why we are talking about the concept. In current cost is used when there is a inflation. Fair value will use when there is a disposal. Is it right? When there is a disposal, and present value will be used when there is a cash flows. Is it right? This is the basic understanding what we should make it clear. Is that that is the framework? Is that you have talked about historical cost, replacement cost, realizable cost, and the present value. Capital maintenance. This is where it says. Is that whenever you are making capital maintenance, is that whether the value the asset, is it right? Asset efficiency. Is it asset efficiency is increasing or decreasing? It will never decrease practically. Is it right? It will never decrease practically. Always whenever you are making a point of spending on refurbishing, on you are what you are doing. You have a car, is it right? That you will every 3 months, every 6 months, you will go for a maintenance. Fine. In some cases, every 2 years, 3 years, 4 years, you will make some changes. Is that the basic thing? Is you should identify the difference between a capital expenditure and a revenue expenditure. Is it right? Whether the maintenance is financial in terms of borrowings, how you have how you have purchased the asset, or how it is going to be maintained. We will cover this at a later stage. Fine. Now, historical cost. I know I'm not going to take that much time here. Okay, I'm saying little bit fast. Is right? It is or the historical cost, the financial accounting as such. Is it right? Financial accounting is based on historical cost only. There is no plus, there is no minus. Is right? The objective of the financial statement is to provide information about the reporting of financial performance and the position as such. Is it right? With respect to what? With respect to the for assessing the stewardship. Directors are the people who are going to take care of the assets as such. For making what? For making economic decisions. Is it? That's what it says. This is what the economic decisions is nothing but if you take into consideration. Again, I'm writing very simple. Don't say that economic. You are talking about buying and selling. You are talking in terms of it is a profit or loss. It is very easy to ascertain the objective. The historical basis of measurement fails to relate directly to any three decisions. Is it right? See, historical cost, we don't have any other substitute for this. Understand? We don't have any substitute for this as per the requirements. Is it? But we even people don't try. Is it? They have given up. Is it? If the moment there is a historical cost, personal judgment will come. Is it? You are want to replace a historical cost with other cost, a judgment will come. A judgment will come. You will state high price or you will say low price. Is that you can out of the balance sheet you can do anything, but within the balance sheet reflection on the financial statements, you don't have any substitute. You have to take the things what is there on the paper, irrespective of its value beyond the financial statement. Another similar asset might be purchased. Management needs to know the current replacement cost. Is that what is the current? Definitely, you are taking an asset. Is that you have the asset? Is that you have the asset? You are saying that the asset is how much? 50,000. Definitely, you will depreciate it. Is it? Assume you are depreciating for how many years? The life of the asset is how much? The life is 5 years. Understand this. Is that already you have taken 2 years? Is that 2 years are over? It means 2 years are over means how much is the depreciation? It will be on the depreciation will be 20,000. Is it right? 50,000 divided by 5, 10. 10 into 2, 20,000. How much is the carrying amount? Carrying amount is 30,000. Is that we want to replace the asset? Now we will say that definitely the value of replacement will be high or value of replacement will be less. Definitely value of replacement will never be high. Okay, that we have to this we are going to identify as a carrying amount. Is it right? And based on the carrying amount, we are taking into consideration the replacement cost. Is it? These are the issues as an accountant, as a professional accountant, you will come across these issues in the practical place as such. The asset might be sold. Management need to know the amount which will be realized. Which will be realized from sale. Less any cost involved in the disposal. See, that's what I say. If you have the sale value, is it right? You have the sale value minus you have any selling cost, selling expenses to sell the asset. Is it? You sell the asset, you have to reduce that value. Is it? Then only you will get the net realizable value. Again, this may be a no relationship to there is nothing like historical cost, all those things. Is it? The asset might be used for in the business. Is it right? Management needs to know what is the future cash flows. Is that this is what when you are talking about the future cash flows, what we are doing, we are talking about the present value. You have the business, you are using the asset. Is it that you won't say that as after 1 year how much it will generate. The definition of the asset which you have learned yesterday is it should have some economic identity. Is that it should generate cash flows in future. That is the concept of an asset. You are investing now and you will generate cash flows in future. Is that if the asset is not going to have any economic impact, there is no point of having that asset in the balance sheet. Is that what we are doing? We are very much concerned about what should be the future cash flows arising from the asset. See now, when I say now, I'm taking something more. Is it right? I'm talking about the discount. Is it right? What happens? What is the discount? Is it? See, discount is nothing but how the asset value will be reduced. Is that? See, we say that if you take car, they say that every year the value of the car will decrease by how much? 10%. You take IT gadgets. Is it right? You take any gadgets, what will happen? The gadgets value will be decreased by 30%. Is that likewise you take mission? Sometimes what will happen? We are talking about mission. See, these are not assumptions. These are the industry standards. Is it right? Missionary. They say that missionary value will be decreased by how much? 5%. Is that? It is all stated. It is not like that we are doing anyway. In some cases, it is stated. Definitely, based on the different methods, we use our own judgment. Isn't it? This is what the concept of historical cost. What is the traditional approach? Accounting transactions are originally recorded at historical cost. Is it right? Events which have no monetary transaction has occurred are usually ignored. Monetary, see, whenever you take a transaction, the transaction has to be reflected in currency. If it is not reflected in currency, we don't have any option to show it in the financial statement. Income from each period is normally taken only when it is realized. Is it right? See, you have done something, accrual concept. Is it? You have done accrual. Accrual concept will what? Either you will be paid in advance, is it right? Or you have received in advance. Is that sometimes you will pay in advance, rent paid in advance, rent received in advance. If you have paid in advance, it is going to be called as a current asset. If you have received in advance, it is going to be called as a current liability. You receive something in advance. It's not your money, is it right? It's not your money. Right now, for this period, it is not your money. Maybe for the next period, it is your money. But next year, it will be treated as a revenue. But this year, you have received in advance. That is the reason we have to make it say whether it is received in advance or it has been paid in advance. It happens in all the cases as expenses also it happens. Is that? Now, I will put the thing. This is a expenses not paid. If expenses are not paid, it is a current liability. Is it? If expenses paid in advance, is it? If expenses paid in advance, it is a current asset. Is it? It is a current. Is it profit for the period is for matching between against the income other cost of the items in generating the income for such item. That's what it is. What you are doing, we are talking about sales minus expenses. Is it? I'll put all the things into one category. Okay. This is nothing but it is a matching concept. Is it? It's a matching concept. What it says, there are advantages and there are some disadvantages. Is it right? Historical cost, easy to understand. Fine, as simple as that. Whatever is there on the paper voucher, you are going to put on that. Straightforward to produce also. We have to produce the bills, that's all. Historical costs are objective and free from, there is no bias as such. Is it right? We are just as simple as that. You have the bill amount, as you will see the bill and you will pay it, or you will see the bill and you will receive it. Is that? Historical costs are reliable and original values can be confirmed. Based on what? Based on your invoices and any other documents. Is it? Historical cost financial statement do not record gains until it is realized. Until you don't sell, you will not going to say that whether it is a gain or it is a loss as such. In the same way, is it? We are talking about what are the disadvantages of historical cost accounting. Is it? What it says that in periods in which prices change significantly, definitely the more. Is it? I told you what happens. You are buying on 1st of January. Is it right? You are buying 1st of January on 16,000. Is it right? Now you are buying on 31st of. Today is what? Today is 7th of October. Is it right? 7th of October you are buying. You will never ever buy at a same price. Okay? You will buy. See, people say that electronic items are depreciated, gadgets are depreciated. Is it right? You say that the same product you are paying how much? You are paying 18,000. Is it right? This is what the prices change significantly. Is it year on year basis? That is one of the deficiencies. Now what happens? See the thing. You are talking in terms of sales. Is it right? You will take the sales. Assume you are taking the sales. You are selling the same product. Is it right? You are selling the same product. You are selling the same product. You are selling on 1st of January. You sell at 200 at the rate of 200. You are selling on 1st of July at the rate of 220. You are selling on 1st of August. Is it right? 1st of August. You are selling maybe you will sell at 215. Take an example. Okay. You are selling on 30th of September. Is it right? At the rate of 225. Is it? See now what happened? We don't have any. This is one of the. Because of this, the profits will get fluctuated. Okay, because of this, the profits will get fluctuated. It will not have a very clear picture. This is one of the limitations of financial accounting. Carrying amount of non-current assets are substantially below the current value. Non-current assets is nothing but property, plant and equipment. Is it? This is what it says. It will be substantially. You have the product 10,000. Is it? Assume I am having a car of 10,000. Now I want to sell it. I will not get 10,000. Is it right? I will get less than 10,000. No way. Unless it is a classic cars. That's a separate case. Exclusive situations we should not consider. Okay. So that is the most important point why we have to think about historical cost disadvantages. Inventory in the financial position reflect the prices on the date of purchases or manufacture rather than at the current value. Inventory is there, is it right? You are buying the inventory, definitely. You buy inventory on 1st of March, is it right? And you're buying the inventory on the same thing, is it? You are buying on 1st of January 200 and you are buying on 1st of July 220. Is that same inventory, same units, same quality, same product? Is it right? It will have its impact on the performance. The statement of profit and loss expenses do not reflect the same thing. What you say, as simple as that, all through the time. What they are doing, they say that we are not reflecting on what? We are not reflecting on the current values. If profit is distributed in the food, the level of operations would have curtailed. Is that if you cannot distribute the profit. Is that you cannot say that I'm talking about the profit for 3 months. Is that you have to calculate profit for what? You have to calculate profit on annual basis only. Is it? You don't have any other option that I will calculate on some other basis, 3 months, 6 months, or 7 months, like that. Is it right? You cannot do on that area as such. Is it right? This is what we have to make sure that profits can be. We say that if that is the case, we use what? We use something called as periodicity concept. Periodicity concept says that it will be for how many months? It will be for 2. No account is taken to the effect of increasing prices. We will not consider prices are increasing unless until it is not sold. It is not on sold. It is not sold. Keep it in mind. We don't have any choice to change the prices in the financial statement. The overstatement of profits and understatement of assets, what happens? It will have a negative impact on what? Return on capital employed. Because what we are saying when you are talking about the return on capital employed, profit, what is the formula? Profit before interest and tax divided by capital employed. Is it right? This is the formula. Is it right? In general. Now what happens? One side your profits are increasing, you are showing less cost, and another side your assets are understating. Is it right? It's again, if you have this mismatch, again I will repeat this. Because of historical cost, what's happening? Your profits will increase. Is that you are showing less cost? Is it right? You are not showing the actual cost. Is that actual cost will be less than the book cost? Is it right? One side your profits are increasing, the second side your assets are decreasing. There will be a mismatch and it will have a wrong message, a wrong judgment, I can say. Is it right? More than wrong judgment, the judgment will not be accurate. Is it right? Judgment will not be accurate whenever there is a mismatch like this as such. Is it right? Now they gave you a very small example. I'm not going to make that much time. Is it right? A acquires a machine in 2004. The machine cost how much? To 50,000. Estimated life is 10,000. See how things will change. Is it right? That is the message we have to understand. Is that is the message? And company B require identical message. One side they are purchasing on when, one side they are purchasing on 2004, and the same machine is purchased on 2005. When you have purchased in 2004, how much you have paid? 50,000. When you are purchasing 2005, you are paying how much? 48,000. Is it right? And definitely that here there is nothing is there. Is it life? After 1 year, the life will be how many years? 9 years. Company pay, what happens here? This is what is a cost minus scrap divided by life. Is it right? If they don't say anything, by default use straight line method. Is that nothing will happen? Nobody will reduce the mark. And in most of the cases they will not say. Is it right? if you take 50,000 divided by 9, depreciation is this much, whereas depreciation in other case will be this much. Fine. Now, what will happen? That's very, here we are calculating depreciation for how many years? Here we are calculating depreciation for 2 years. And here we are calculating depreciation for 1 year. You see the things. What happens? You have paid more, but the value is less. Here you have paid less, the value is more. Got my point? This all happens, is it right? This all happens because of this what? Depreciation. Here what will happen? In this case, profits are less, is it right? Profits are less, is it right? And the value of the asset is also less. Whereas in this case, what happened? You are reducing the profits by how much? See, in the previous case, you are deducting 5,000 depreciation. In this case, you are deducting how much depreciation based on 5. What is the comparison? Why we are doing this? If they are having a historical cost, definitely it will have a reflection in the valuation, both in terms of the assets from the financial statements point of view, specifically balance sheet. Definitely we are talking about the depreciation, it will affect the profit and loss account also. Both companies are identical but the statement of profits should show different profits. Because what is the basic limitation? Because we are following which type of accounting? Historical cost. Is it? You have the replacement cost. Is it right? You have the replacement cost. In the replacement cost, what happens? We will say that how when you want to replace it, what is the cost? Is it right? The asset cost is how much? The asset cost is 500,000. How many it is for how many years? It is for 5 years. Is it right? Depreciation will be how much? Depreciation will 100,000 per annum. Okay. Now, if the current value of the price at the end of year 2, is it right? How much is the current value? Current value is 600,000. Is it? Then using the replacement cost would be how much? We have to take into consideration the current cost. Is it? Now, again, what we have to do? How many years are there? It is for how many years? It is for 5 years. Is it right? Every year, what is the depreciation? Depreciation will be per annum into 2 years. Is it right? Into 2 years, it will come to how much? It will come to 240. Is it? It comes to how much? It comes to 240. Then what have to do? 600,000 minus 240,000. It comes to how much? 360,000. Here what happening? Again into 2 years, is it right? Again into 2 years, it comes to how much? It comes to 2. So the purpose of doing this is to know the sensitiveness of the calculation of depreciation in terms of the financial statement. Here what will happen? You are saying that it is 5,000 minus you are talking in terms of 2,000 is the depreciation. The carrying amount will be how much? Replacement cost. Got the thing? That's the way you should. The moment you say it is a replacement, this is the same thing we have done in impairment also. Is it? This is the same thing we have done in terms of impairment also. Calculate carrying value. We are talking about the fair value. Is it right? And apart from that, if you recollect it, there is a difference between a property, plant and equipment, and they are talking in terms of investment property. IAS 16, is it right? IAS 16 and IAS 40. When you are coming back tomorrow, just go through these rules. What is related to 16 and what is related to 40. Because we are going to, when you are doing the calculation, the things, the rules has to be very, very clear in our minds. Okay. That is the economic value is nothing but we are talking about what is the present value of the future cash flows. Is that that's the most important. I told you present on the value of the money will decrease. Is that the value of currency will decrease? It's not like that you are saying it is 15,000. You see, very simple. I will tell you like this. Is that when you are making a deposit? Is that somebody will make a deposit? Is that somebody make a deposit? Assume that they are making a deposit of 40,000 riyals. Bank will give interest at the rate of 2%. Okay, assume. Means what happens? The value of the money, is it right? The time value of money. Is it the time value of money is decreasing? Is decreasing at the rate of 2%. Is it right? I told you, I have given you some indication. Is it right? I gave you some indication. I have not given you a complete one. What I told you, that what is the present value? Is it right? I will write this. Is it right? Because you are doing for the first time, present value is nothing but cash flow divided 1 plus R. Is it right? R is 200. Is it right? Cash flow is how much? 40,000 divided by 1.02. How much you will get? How much you will get? Rizwan. How much? 39. 39,215. 39,215. Is it? To the power of 1. Okay? This is to the power of t. To the power of n. I will put like this. Is it right? This is for the first year. Is that 40,000? 40,000. I'm not putting all the 0.2 to the power of 2. How much you'll get? Rizwan Sheikh, where are you? Rizwan, where are you? 38, yes, 38, 446. Yeah, here, yeah, I want to listen your more voice, dear. Is it right? Fine. Is it? This is the present value. Just keep it in mind, okay? We will do how we have, this formula will never change. Okay, never ever change. You do it financial management, you do it advanced financial management, this will remain same as such. Is it right? Now, what they are saying, a company owns a machine which is purchased 4 years ago. Okay, for how much they have purchased? They have purchased, cost is how much? Cost is 100,000. Is it right? Cost is, the accumulated depreciation is how much? See the thing, the accumulated depreciation. Is that accumulated depreciation? What is the life? Life is how many? Life they have purchased 4 years ago. Means 4 years lapsed. Okay, 4 years has been lapsed. Accumulated depreciation is how much? Accumulated depreciation is 40,000. The machine could be sold to another manufacturer, or what is the sale value? If they are going to sell, can sell it for how much? They can sell it for 50,000. Is that there is a dismantling cost? Is that there is a dismantling cost? How much is the dismantling cost? Dismantling cost is nothing but the selling cost. Is it right? How much is the dismantling cost? Is 5,000. Is it right? Net realizable value. Is it right? Net realizable value. Is it right? Net realizable value is 45,000. If you are talking about the things, they have a new version. Is it right? How much is the? There is a new version. Is it how much is new version? New version is 110,000. Is that the cash flow from the existing machines? Cash flow means the economic value. Is it right? The economic value. What? How much is there? 25,000 for the next 2 years. Is it right? Year one, and year 2. Is it right? Year 1 and year 2. I am writing very roughly, okay? Once I start doing solution, I will make it more clear. Is that how much is there? 25,000. Fine. And year 3. Is it right? Year 3 is how much? Year 3 is 20,000. Fine. And what is the value of R? Value of R is how much? 10%. Okay, the value of R is how much? 20%. 1. Now you put it as a solution. Is it right? You put it as a solution here. Is it right? A. Historical cost. Is it right? Historical cost. Historical. What is the historical cost? Historical cost is how much? How much is how much they have bought it? Historical cost is 100,000. Is it right? Historical cost is 100,000. Here why we are doing this is we are doing this only to make sure that how the difference from one method to another method. Depreciation is how much? Depreciation for 4 years. Accumulated depreciation. Is it right? How much is there? 40,000. Fine. 40,000. Is that what is the value of? See how the value of the assets will change. Is it right? This is the first one. What is the net realizable value? Is that what is the selling cost? Selling cost is how much? Selling value is order. Net realizable value. Selling cost is how much? 50,000. Fine. Minus dismantling cost. Is that dismantling cost is how much? 5,000. How much we are going to receive? It is nothing but 45,000. This is called as net realizable value. Fine. What is the replacement cost? Is it right? What is the replacement cost? See, you understand these concepts. That's very important. The subsequently when you do the problems, you will not have any issue. Only thing is we have to understand about the dates. As simple as that. Is it right? Replacement cost. What is the replacement cost for new asset? Is it what is the replacement cost of new asset? The replacement cost of new asset is how much? 110,000. Fine. Now, how many years has been lapsed? 4 years. Is it depreciation? Depreciation for how many? For whatever the lapse, we have to remove it. Is it right? 110,000 divided by 4 by 10. Is it right? How much you will get? You will get 44,000. Is it right? You will get how much? You will get 44,000. How much is the replacement cost is? The value of the asset is 60. Fine. Now, okay. This is 1, 2, 3. Is it? Now, coming back to the economic value. Fine. Economic value. See, when we are talking about the economic value, is it right? Economic value. Here, what is the formula? Cash flow. Cash flow. Is it right? Cash flow into discount factor. They gave you the discount factors. Is it right? They gave you the discount factors for year like this. Is it right? These are the discount factors they have mentioned. Is it right? At the rate of 10%, they already mentioned. Is that the rate of 10% or these are the things. Fine. Now, if you work out on that area, is it right? Year 1. Is it right? Year 1. How much year 1? 25,000 times 0.909. Is that year 2? Is it right? Year 2. How much? 25,000 times 0.826. These values will also not change. Okay. Just wait for a while. The moment you will do financial management, you don't need these values also. Automatically, the more you practice it, it will be there in your mind. Okay. Year 3 to 6. Is it right? Year 3 to 6. How much is there? What is that? It is 20,000. Is it right? 20,000 into 2.619. Don't worry about that. How we got it. I will tell you that secret also. It's not a secret. Okay. Yes. How much you will get? 22, 725. Is it right? Next 725. The next one 2650. Next 52, 52, 380. Good. Here 52, 380. Total how much? 5, 10, 15, 1, 1, 17, 1, 5, 1, 10. This much? 95. Okay, sorry. Okay, sorry, 1 minute. How much? 95, 750. Fine. Is that now you can understand the difference between these four? Is it right? Very, very important. This much is our understanding. Okay. How we have to calculate the historical cost is easy. Net realizable value minus selling cost. Replacement cost is whatever the current cost minus the depreciation over the past life, and economic value is nothing but with respect to the what it says with respect to the discount factors as such. Fine. This very important. Okay. Somewhere we will cover this. What is this is the current purchasing power accounting. What is the current purchasing power accounting? Where I will say that this is basically on what this talks about. What this talks about inflation. Is it right? This talks about inflation, purchasing power index. Is it right? Purchasing power index, CPP factor, index at the reporting day. What is the index numbers? Is it right? Consumer price index. Is it right? You will have. I am not taking that much time. You will have consumer price index. Is it? You have wholesale price index. Is it? Every 14 days they will come with these values. Is it? You will come up across in the news. Okay, what is the rate of inflation? If the inflation is increasing, the rate of interest will also increases. This is nothing but it is a directly associated what? It is directly associated with current purchasing power. Is that you will take into consideration two things. Is it that one is with respect to monetary items, one are with respect to non-monetary items. Now monetary items are basically related to what? Cash. Is that basically related to cash. Non-monetary items, non-cash items. What are the non-cash items? You have machinery. Is it right? You have the non-monetary, it's not in the form of cash. Okay, that's very simple. Don't say that machinery is valued, but it is not in the physical form of cash. Is it right? That is the basic concept of monetary items and non-monetary. Again, there are some. See why we will do this. Actually, what happens? The values will increase. Is it right? Values will increase. The prices are increasing. I will not use the values. The prices are increasing. When the prices are increasing, definitely we should track it out. Okay, we have to keep track of things, how it's happening. We will say that yes, last year I have purchased, now the prices are increasing. It's not. It's a global phenomena. Is it right? Anywhere in any part of the world, the prices will always increases. Is it right? Very, very rare cases the prices will decrease. Is that CPP accounting is both simple and objective. It relies on the index. Okay, in wholesale price index, consumer price index. It's adjusted for changing in the unit of measurement. Therefore, true system of inflation accounting. It is, in other words, it is called as a inflation accounting. Understand point? In other words, if you take the realistic view, is it? Again, I'm I'm reminding you, we will not use anywhere in any time. We are only know this only for our discussion, awareness, as simple as that. Okay, don't say that we are going to have an inflation accounting. No, it's only for our discussion and understanding as such. Is it right? It measures the impact of entity in terms of purchasing power will increase. Is that if inflation increases, what will happen? The purchasing power will increase or decrease? Tell me. If inflation increases, purchasing power will increase or decrease? Tell me right or wrong, I am here to correct. Yes, tell me, Rizwan. Where are you people?
It will be decreased.
It will be decreased. Where are you, Rizwan? Okay, be here. Still, I'm not getting response from you. Is it right? I'm asking you. I'm calling on. Yeah, only here. Tell me, dear. I'm waiting for you. Is it right? Tell me. I'm waiting. Please focus here. Please focus here. Very simple. I'm saying. Don't say it is a recording and it will work. Is it right? Please focus here. As simple as that. Recording is only to help you for revision. And when you see, very simple. There is lot of difference between listening here and listening to recording. When you listen to recording, you will not be that much focused. Is it? Don't take the advantage of having a recording and will say that. Very simple. Recording is only to support you. Fine. Now, what are the disadvantages? It failed to capture the economic substance. Definitely, we don't know how the prices will have its increase or decreases, how it is going to have impact. Is that the information is also unfamiliar? Is it right? The information is also very unfamiliar, because what happens? The inflation will be different. The rate of inflation, is it right? The rate of inflation will differ, is it right? They differ from country to country. Is it? That will differ from country to country. When the rate of is differing from country, you are talking about exports, you are talking about the imports, all those things. Is it right? Automatically, it will have its impact. CPP does not show the current values to the business of the assets. Means we are not talking about the business of, we are not talking about the non-current assets. We are not. It only relates to what? It mostly relates to what? It mostly relates to the income statement. Fine. That is one of the drawbacks. Is it right? The general price index is not necessarily appropriate for all businesses. Is it? It's not like that. You are having every other. See, if you take gadgets, is it right? Technology, the value of the gadgets will decrease or increase drastically. Is it right? When they launch the product, the prices will be very, very high. When after some time, the prices will be very automatically it will reduce. Is it right? That is why we are talking about the moment we say inflation is related to current purchasing power account. Current cost accounting, we are talking in terms of what? We are talking in terms of basically, we will focus on what? We focus on the cost aspect. Replacement cost, current cost. Is it right? What is the current cost of the things asset? It is based on the deprival or the values of the business. Deprival value is nothing but is equal to the loss suffered if the asset is deprived, and usually represented by the replacement. See what happens, sometimes the asset will not be not in a position to use. Is it right? This is not in a, you say what happens in some cases the asset will get damaged. In some cases the asset will be not outdated but damaged. Is it right? The assets will get in fire. Is it right? Assets is some major damage will happen. Then what will happen? How you are going to replace that asset? Is it right? What is the current cost? Definitely, you have purchased the asset. Is that you have purchased the asset on 2019? Is that they say that the life is going to be 5 years? Is that life is going to be 8 years? Fine. Now on 2022, is it right? 2022. You will say that after how many 19, 20, 19, 19, 20, 21, 22. After 4 years, is it right? The assets will be damaged. Is it right? Then what will happen? The same asset, you have purchased the same asset for this 20,000. Again, you cannot purchase the asset for 20,000. Either it will be more or it will be less. Then in that case, how we have to treat it? Is that inventory and non-current assets are valued at deprivable value. Is that deprivable value means definitely what is the current value? Is it right? Current cost. An additional charge in the profit and loss account means definitely cost is decreasing. It is a loss. Is it right? It is a loss. Cost of sales. Is that opening inventory plus purchases minus closing inventory. Definitely. What is the when you are talking about what is the inventory? The inventory as per IAS 2 says that you have to calculate cost or net realizable value, whichever is less. Is it right? We have to calculate either on the cost or net realizable value. These are the complications which you will come across whenever you are talking in terms of valuation. Is it right? An additional charge in the financial statements. In non-current assets, what will happen? Definitely they will have an impact on what? Indirect on depreciation. Is it? These are the techniques. In spite of that, keep it in mind, these two methods, that is current purchasing power accounting and current cost accounting, is only on paper. You will never ever come across these things in the financial accounting. Current cost is nothing but the replacement cost. We have done this. Is it right? In the last case, how much we have done? We have done with respect to 140, and we have calculated depreciation on that. What is the current cost? It is going to be, replacement cost is going to be 16,000. Is it right? This is where we have in the previous case we have charged how much depreciation. In the historical cost we have charged depreciation 40,000. In the current cost we are charging depreciation for 44,000. You have same thing, current cost accounting. It is most important advantage is it is relevant to, fine, we are concerned about what is the cost. Is it right? Immediately we will ask what is the cost. Is it right? We are very much focused on the cost aspect as such. Is it right? Users will be able to assess the current state or the performance, and assets are stated at their value to the business. Is that? That's very simple. What is the current cost? Any product will say, yes, you have bought a car last year. Now what we say, what is the cost of car this year? Is it right? That is automatically it will have its impact. Is that? What are the disadvantages? It's very subjectivity. It talks about we are talking about the age, we are talking about the life of the product, conditions are there. So many things will come into picture. Is it right? And lower reliability than what they are saying? They are saying the historical cost is more reliable compared to other costs. Is it? In current cost, familiarity. People will not understand the complications. Is it? There is a complexity, and it only adjusts for non-monetary assets, not all assets and liabilities. Is it? Now what we have covered now till now, we have covered about the concept of fair value, the economic value, the replacement cost, and the historical cost. Is it right? What are the different methods of accounting? The historical cost accounting, advantages, disadvantages, current purchasing power, and current cost accounting. Is it? Now, what are the things? Is that which are the following measurement basis? Is that which are the measurement basis we have done? Is it right? We have done historical cost. Is it right? We have done economic value, present value. We have done fair value. We have done current cost. You don't have any residual value. Is it right? We don't have any residual value as such. Is it right? We don't have any future value also. Is that we don't have any future value also. Fine. We don't have future, the concept of future value is not there. The concept of residual value is not there. Is that? The only, what are the things we are going to cover? We have covered the current cost, historical cost, fair value and present value. Is it? Which of the following statement is true about historical cost in terms of rising prices? Is that what happens if the prices are rising? Is it right? If the prices are rising, what happens? Definitely, see the things. Is there 1 minute? I will put the things like this. Is it right? In normal situation, and in the case of prices are rising. Is it right? Prices are rising. Is it right? Now, when if prices are rising, is it right? You take the sales, is it right? You take the sales, how much? 20,000, is it right? Here, when the prices are rising, the sales will be how much? Assume the sales will be 22,000. Is that? You have the cost, is it right? You have the cost of sales, is it right? When you have the cost of sales, this is where we are very much concerned. Yesterday also we did. Is that you have the opening inventory, you have purchases, you have closing inventory. Is that right? We have a normal situation. Opening inventory is what? 10,000, purchases is 5,000, and closing inventory is 3,000. What is the cost of sales? Is it? Cost of sales is 15 minus 3, it comes to 12,000. And the gross profit is going to be how much? 8,000. This is the gross profit. Fine. Now, prices are rising. Is it right? Is it 10,000? This is historical cost. We cannot do anything with respect to opening inventory. Opening inventory is last year audited value. Purchases is how much? Assume purchases are increased by how much? 6,000. Is it right? Purchases are increased by 6,000. You put it, purchases are increased by 8,000. Is it right? Definitely, the value of the closing inventory will be also be, instead of 3,000, it will be how much? It will be 4,000. Is it right? It will be 4,000. Prices are increasing. 18 minus 4. Is it right? 18 minus 4. It comes to how much? 14,000. The value, how much is there? Incidentally, it comes how much? 88,000. So, is it right? Put like this. Is it right? Put like this. 1 minute. Fine. Put 1 minute. 1 minute. Prices are how much? Prices are 6,000. Is it right? Prices, just I'm taking a value, okay? 16 minus 4, it comes to how much? It comes to 12,000. Is it? It comes to 12,000. What will happen? The profits will be how much? The profits will be 10,000. When there is a price, when the prices are increasing, is it right? When the prices are increasing, what will happen? The profits will be overstated. Is it? The profits will be overstated. Got my point? And assets will be understated. What is it? Right? Whenever the prices are increasing, what happened? Here profit is how much? 10,000. Here the profit is 8,000. Is it right? Assets will never be overstated. Is it right? We are not talking about the assets. It will not have impact on assets becomes non-monetary assets. Is it right? Non-monetary. Unrecognized gains will be recorded incorrectly. There is no unrecognized gain. It always a recognized gain. Is that's the reason. The moment you will have something like this, immediately you put some values here and you take some values, assume your values. Is it right? Realistic values, and automatically what will happen? See how the things are going to have changing. We are not talking, see, when prices are increasing, we are not focused on the assets, is it right? We are focused on the what? We are very much focused on the profits. Is it okay? Next. Is it? Which of the following is an advantage of current cost accounting over historical cost accounting? Just go to the current cost accounting. Current cost accounting. What it says, it is most advantage and it is relevant. Is it right? What is it is more relevant to the users. It talks about what? It talks about the current state of business. Assets are valued at their values. Is it right? That is the current. Means what it says when we are talking about when we are talking in terms of the advantage of current cost accounting. Is it right? When we are talking about the current cost accounting over the historical cost. Is it right? Where is that? Possible greater subjectivity, familiarity, complexity, and adjustability. Less subjective, complexity over historical cost. Historical cost is easy to understand. Is it right? This is the advantage of historical cost accounting. Is it right? It is less subjective, no. More relevant, no. It is, when we are talking about current cost accounting, they say it is more relevant. Is it right? Relevance is there, fine. Users will be able to assess the current state or recent performance of the business. Assets are stated at their values. It is right. What it says? They are saying that it is more relevant. They are what they say? It is more relevant. Fine. Now, is it right? We will do, yeah, we will do some section. We'll do section B. Okay, section B. Put it as section B. Okay, section B. Fine. Yes, good. That's good. I want immediate response. Is it right? Yes, fine. That's good. Inshallah. Now, is it? Slowly we'll do. Now whatever we have done, got my point? Whatever we have done, we have to follow those concepts as such. Got my point? That's the most specific thing which we have to make you understand. Is it right? Now, the following again I am putting this file will be continued, only the recording will be different, but unless I complete the complete file, I will not go to another file. Okay, 7 I have given here file is it 7, 10, 20, 22. Now this is related to conceptual framework. Okay, this is related to some assets valuation, tangible assets. Is it right? You will have the scenario, you will have the questions. Is it? For like any doubt anywhere, you just stop me. Okay, flight line is a airline which treats its aircraft as complex non-current assets under the historical cost model. Fine. Now what they say it is in thousands. Okay, it is in thousands. They have installed 1st April 2005, 25,000 5 years. Engine installed 1st April 2005, 9,036 flying hours. In the year ended 31st December 2009, aircraft flew how many hours? 1200 hours for the months of for 6 months, 30th September. On 1st October, they have suffered a bird strike and incident which had damaged the engine beyond repair. This was replaced with a life of how many years? 36,000 at the cost of 10.8 million. Fine. Now, when we do the things, the first you should know methods of depreciation as per IAS 16. Is it methods of depreciation as per international accounting standards? What it says, we have written down value. Is it right? We have written down value. We have straight line method. Is it right? We have a straight line method. Now again we have units. Is it right? Units, or you can put it as hours method. It's a common understanding. As a student of financial reporting, you should have that that concept where which one we should follow at which place. Okay, they say that, see the things, they very clearly, they said that they have bought it from when they bought it on 1st April 2004. Is it right? They've bought it on 1st April. And what is the date as of today? 31st March 2009. Is it right? And they have worked it with respect to what? They have worked with 30th September 2008. Is it right? And these 6 months, is it right? These 6 months, it has been not operated. Fine, it has been not operated because of the damage. Okay, how much you have mentioned, when you have purchased it, is it right? The interior cabin is 25,000. Is it right? This is the cabin, and engine is how much? Engine is 9,000. Okay, this is the cabin. This is the cabin, and this is, sorry, yes, this is the cabin, and this is the engine. Fine. Are you clear about this? They have mentioned everything, that they have been replaced on 1st October. Beyond repairs, they have made of how much lives? 36,000 and 10.8. Okay. Now, what they are saying, what is the depreciation to be charged for what? To be charged for the engine. Is it right? Depreciation to be charged for the engine for the 6 months. Is it? Depreciation charge for the engine for 6 months. Is it right? Next, this is for this one. Okay. What is the things? How much cost? Is it right? Cost multiply by, how we are going to take into consideration how many hours they have flied. Is it right? This where we are doing, this is doing for what? This we are doing from 1st April 2008 to 1st October 2008. How many months? April, May, June, July, August, September, October. Okay, how many? 6 months. But we are not talking about the during 6 months. How many hours they have flied? They have flying how many hours? They have flying for how many hours? 1200 hours. Total hours are how much? Is it? Total hours are how much? Total hours are how much? Total hours are 336,000 hours. Is it? What is the depreciation? What is the formula for depreciation in terms of this situation? Cost multiplied by hours, we can say hours flew, is it, during current year, is it right? During the period divided by total number of hours. Total number of hours. How much is the cost? Cost is 9 million. Is it right? Cost is 9 million. Put it in million. What can happen? How many hours are there during the time? 1200. Total hours are how many? 3600. How much you will get? How much? 9,000,000, 9 into 12, 1200 by 360, how much? Fast, very fast, very fast. Yeah, you see, I will see why I don't say that I'm telling you fast. Is it that I'm making you to do fast? Okay, I am making you practice to do fast. Is it right? Before I complete, answer has to be there. How much is there? 300,000. Is it right? How much is there? 300,000. Fine. Now, which of the following? Are you clear about this? See, that is what it says. MCQ. Every question I will ask. Is it right? Before I ask, you have to say yes or no. I wish to listen no also. Okay. If you are not clear, say no. Repeat again. I will repeat again for you. Fine. That's very simple. Now, which of the following correct accounting treatments of the engine? Is it right? Write off the damaged engine, capitalize new engine and depreciate over 24,000 hours. See what they have done. First understand what they have done. They have replaced the new engine. Is it right? Beyond replace, they replaced the new engine with a life of 36,000 and a cost of how much? 10.8. Is it right? Is that 10.8? Is that means this has been they are replaced? Is it right? They have been replaced means definitely you have to write off that one. Is it right? They have what they are asking is what is the correct accounting treatment of what? Of the engine. Is that of the engine? Is that when the write off the damaged engine, capitalize the new engine and depreciate? How we will depreciate 2400 hours? Is that depreciation is based on number of flying hours. Is that number of flying hours? This not be based on directly. You cannot depreciate 24,000 hours. Is it right? You cannot say, well, again 24,000 from where did they got the 24,000? There's nothing in 24,000. Where is that 24,000? Nothing is there. 24,000 you will. Is it right? There's nothing like 24,000. Fine. Treat 10.8 million as a repair. Why it is repair? It is not. We have replaced the engine. It is a long term. Is it right? It is a long term. If it is long term, it is capitalized. It is long. We cannot as a damage and continue depreciation for the first 6 months. No. 10.8 has to be, it's not a repair. It is a replacement. Is it right? It is not a repair, it is a replacement. Is it right? It is a replacement. Capitalize 6 million to replace the damaged engine expense. We cannot do it. Is that we are spending on how much? We are spending 10.8. Is it right? We are not having anything is there. Is it right? We cannot do this. Write off the damaged engine, fine, capitalize the new engine and depreciate on for how many years? Yes, you have to depreciate over a period of 36 hours based on the flying hours during the period. Is that based on the flying hours during the period as such? Okay. Answer is what? Answer is it right? Now, are you okay about this? Next. A wing was also damaged. Good. But was repaired at the cost of how much? 3 million. Is that the wing was damaged? The accident also caused cosmetic damage to the exteriors of the aircraft, which requires how much? 2 million. Is it right? Wing is also damaged. We repair. Repair is nothing but what? Repair is nothing but operating expenses. Understand? But repair is not repairs and maintenance, operating expenses, and a cosmetic repainting. Is it right? Repainting is also what? Repainting is also an expenses. Is it right? 3 million repaired to the, we will not capitalize. It's not, is right? It is repaired. We never capitalize. It is a expense. And 2 million repainting is also an expense. Is right? See, whenever you will come across these type of questions, they will ask you. Classification of capital expenditure and revenue expenditure. Fine? Good. In aircraft was, is it okay with you?
Yes, it's okay.
Good. Now, an aircraft was out of service for some weeks due to accident. Fine. Flight line took the opportunity to upgrade the facilities. How much it happens? 4.5. Is it right? To upgrade. Upgrade how much? 4.5 million. Fine. They did not increase the estimated life of the cabinet fittings. What is the life of the cabinet fittings? The life of the cabinet fittings is 5 years. Okay. The life is how much? The life is right? The life is how much? The life is 5 years. They remain same. Is it right? It remains same. Is it right? It remains same. Tomorrow also I will continue the same file. Okay? Inshallah. They did not increase the estimated, but improved facilities enable flight time to substantially increase the airfares of this aircraft. What is the carrying amount of the cabinet fittings? Okay, what is the cabinet fittings? Now, what first see, what is the cost? Cost is how much? Cost is 25,000. Is it right? Life is how much? Life is 5 years. Is it right? Life is 5 years. What is the current cost? Carrying cost. Is it right? Carrying cost. When they have purchased on 1st April 2004. 4 or 5? 5. Is that? They have purchased on, listen carefully, understand, focus here. They purchased on 1st April 2005. Current date is how much? Current date is how much? Current date is 31st March 2009. Okay? And listen carefully. They have not used the aircraft for 6 months. Is it right? They have not used for how many months? They have, out of this, they have not used for how many months? Not used for 6 months. Got my point? Is it right? Means from 1st October till 31st March they have not used. Is it right? Now is it right? They have not used. When they are not using the aircraft, we are not going to calculate depreciation also. Is it right? As simple as it is not generating revenue. Is it right? It is not generating revenue. Means effective period of depreciation. How much is effective period of depreciation? Tell me fast. Effective period of depreciation 1st April to 2004. Is it right? 1st April 2005, 1st April 2006, 1 year, 2 years, 1st April 2007, is it right? And 1st April 2008. Is it right? This is 1, this is 2, this is 3. Okay? And They have not used for 6 months. Is it right? They have not used for 6 months. 1st April 2009. Only how many months? It is only 6 months. Because they have not used for the 6 months. This has not been told. Is it right? It is not a straight line method. If it is a straight line method, left, right, center, we can do it straight away. Is it right? Means effective period, if it is that, effective period will be how much? Effective period will be 3 years 6 months. Depreciation, is it right? Depreciation, how much is the depreciation? 25,000, 3.5, 3 years 6 months, 3.5 years divided by 5 years. How much you will get? Rizwan Sheikh. How much? 17,500. Good. Is it right? How much? 17,500. This is the depreciation. Is it right? Carrying cost is how much? Is it right? Carrying cost is how much? Carrying cost is total value minus depreciation. Is it an accumulated depreciation? We can put it like this: 25,000 minus 7,500. It comes to how much? It comes to 7,500. Okay, done. This is the value. Now they have upgraded. Add. Is it right? Add, upgrade. How much they have upgraded? They have upgraded things after it has been happened. Is it right? What is the upgraded? How much they have upgraded? They have upgraded by how much? 4.5 million. Is it right? The means total value will be how much? Total value will be upgraded means capitalization. Is it right? Total value is 12,000. Fine. Now total value is how much? 12,000. Okay. Now what happens when you want to know the depreciation? Is it right? You want to know the depreciation for the 6 months. What is the carrying amount? Is it right? What is the carrying amount? Carrying amount. Is it right? Carrying amount is how much is the depreciation? Is it right? 12,000 into 6. Is it right? 6 by 18. Can I write like this? Why we are having 18? You know this? Remaining life. Total life. Is it right? Total life minus total life minus what we have to do? Expired life. We have to write like that? No. Life elapsed. Is it right? Life elapsed. Total life is how much? 5 years. Is it right? How many years has been over? 3.5 years. Remaining is how much? 1.5 years or 18 months. Is it right? 1.5 years or 8 months. This is what? This is 6 months divided by 18 months. How much is the depreciation? Depreciation will be how much? 1 by 3. Depreciation will be how much? 4,000. Good. Carrying amount is what? This is the amount on after upgrade. Okay, after upgrade. How much carrying amount? Carrying amount is 12,000. Is it right? Minus depreciation is how much? Depreciation is how much? 4,000. Is it right? Actual amount will be how much? This is as on 31st March. Is it right? As on 31st March 2008. Understand my point? Answer is what? Answer is, I am writing with different colors. Okay, follow the colors. Is it right? Follow the colors. You will not get confused. Okay, are you clear about this? Wait for a while. 1 minute. I will explain you this. It says that what they have made, life of the years is 5 years. Fine. Now they have a damage. They have upgraded it. How much they have upgraded it? 4.5 million. Okay. Now fine. First you have to depreciate it for how many years? You have to depreciate it for 3.5 years. Is it right? We have done this. We have done depreciation is what? Depreciation is for, I am putting it there. Is it right? We have done depreciation is what? Depreciation for 3.5 years. Is it right? We got a depreciation of how much? 17,500. Carrying cost, as on we got it. Is it right? Carrying cost is how much? Carrying cost as per carrying cost, is it right? Carrying cost as per what? How much is there? It is 7,500. Okay, carrying cost is how much? 7,500. This has been upgraded. Add upgrade value. How much you have add? 4,500. What is the value which you are going to get after that? 12,000. Is it right? The upgraded value. Capitalize it. Is it right? On the capitalization, we have calculated what? Depreciation. In the depreciation, definitely what we did, we have reduced the depreciation. Here I have done remaining life. Remaining life is 5 years minus, is it right? 1 minute. I'll put it like this. Is it right? Effective. Wherever is there, just I am putting it in the box so that you will be very specific. Is it right? Yes. Is it okay about this? Yes. The bird strike accident represents an indication of impairment. Complete the following sentence from the choice below. The aircraft will be impaired. What is the formula for impairment? Please tell. What is the formula for impairment?
Is the carrying amount more than recoverable amount?
If the carrying amount, yes, very good. Carrying amount is more than recoverable amount. Is it right? Carrying amount is more than recoverable amount. Replacement cost is not. Fair value is not. Value in it is not. It is the carrying amount. Fine. Is it okay? While see the things. Now, while doing the next lectures, you have to revise the previous lectures also. It will be very easy and it will be very quick. Okay, both the things will happen. Means now you should make it a point. You have to, the moment you are doing something now, it will have the thing, something we have learned previously. Is it okay? Can I start now this one? Say yes or no. Don't say no, okay? Fine? Okay. Tomorrow, first minute, I will stop recording.